Hey, condominium unit owners, Tony Cardinali here with CrossCountry Mortgage in Westford, Massachusetts. Wanted to share with you a little insight into what's going on with condominium deductibles today as it pertains to the insurance issues that are coming up across the country. This is widespread across the United States right now as there's an ongoing challenge with condominium insurance policies where the deductible that is being passed on to the unit owners is larger than Fannie Mae or Freddie Mac financing would allow. And so Fannie Mae and Freddie Mac are the largest producers in the United States of supply of mortgage money to the institutions that lend to the public. And today, currently, about 60 to 70% of all mortgages are locked with Fannie and Freddie. And therefore, it's a large percentage of the buyers that might be purchasing a unit in your condo development might be Fannie Mae or Freddie Mac financed buyers. So you can see it could affect the value of your unit if you're only limiting yourself to buyers that can get Fannie and Freddie financing, or you're trying to include them in the universe of buyers, and if your development has this condominium deductible issue. Here's the issue. Fannie Mae and Freddie Mac are limiting the deductible that is allowed to be passed on to the unit owners of a condominium to a maximum of 5% of the building coverage. So for example, if a building is in a condo development has a master insurance policy that covers all the buildings and all the structures in the development, if that master insurance policy has say $128,425,000 for building coverage to insure the entire development in case of a total destruction, if you multiply that building coverage by 5%, you get $6,421,250. And that would be the maximum deductible that they would allow, Fannie Mae and Freddie would allow to be passed on to the unit owners in order for Fannie and Freddie to ensure to securitize the mortgages in that development. And that means, if you take the number of units, say there's 360 units in the development, and there's a maximum of $6,421,000 in deductible that's allowed to be passed on, that equals a maximum of $17,837. That's the maximum per unit deductible that would be allowed in this condo development per unit owner in order to have Fannie Mae and Freddie Mac financing work in the development. If that is not allowed, if it's higher than $17,000 per unit for max deductible, that's okay. It's just you're not going to get any unit purchasers that can finance or refinance using Fannie Mae and Freddie Mac money. Okay, you'll have to go to a local bank. Typically the local banks, credit unions who will do the mortgages, they call them non-warrantable mortgages. They're going to be a maximum of 80% loan to value, so 20% down payments. So if you're selling a condo in a development with this potential issue, you need to look for buyers that are putting 20% down. That's so that they can at least have the option to still successfully close on your unit and get a local bank to finance it. The problem is not everybody has 20% to put down on the homes, and you're limiting yourself to that universe of buyers. So potentially buyers that are putting 10% down or 15% down that are excellent buyers, they simply didn't have 20% to put down. They're not going to be able to make an offer and win that offer in this development because they can't get financing in the development. It's a non-warrantable development. So you could be potentially limiting the value of the property because you can't get access to all the potential buyers in a marketplace. This is not a lifelong problem. It's going to get fixed. There's just a disconnect because of what happened in Florida a few years ago with that insurance, the condominium collapse and the insurance the insurance problems that have happened since then. The industry is in a real tough spot right now, and so they are raising insurance costs across the country, especially for condominiums. Condominiums are trying to balance those costs and pass some of that on to their unit owners, along with a smaller potentially. It's balancing that condominium homeowners association fee. So there is a balance. It's going to get fixed. It's not lifelong, but right now there's a problem. It could be a problem for another 8, 9, 10, 12 months from now. We're in the middle of 2024 right now. So if you do have any questions about this situation, if you have questions about your particular master insurance policy in your development, you're trying to sell a condominium or you're trying to purchase a condominium, reach out to myself here at CrossCountry Mortgage. My team will be happy to calculate this for you and let you know what the max per unit deductible is. and how to position your sale or your purchase so that you can win the financing. Again, my name is Tony Cardinali, CrossCountry Mortgage. My number is 978-577-5402. Have a great week.